Alexander Muthoot, the MD at Muthoot Finance, joining us on the show. Mr. Muthoot, hi, good morning. Wishing you and your team a very happy new year. And thanks for your time today. Let's first talk about your view on gold prices. A very strong uptrend in the last few months, and corresponding with that, your numbers also have seemed to do well. Give us an outlook on what lies ahead in terms of your disbursements. If you could give us an overall outlook on what the borrowing trend looks like right now.
Yeah, good morning, and also wishing you also a very happy new year. Wishing the viewers also a very happy new year. As far as the gold price is concerned, I'm sure you are all aware, because of the geopolitical tensions, the gold price is elevated. Not only gold price, all commodity prices are elevated. So gold is also one of them. So even as recent as 2 days back, there were some geopolitical problems. So all those things are keeping the price of gold elevated. And to me, I feel in the next few quarters also, the gold price should remain elevated. And so that is about the gold price. Now, what we see is there is good traction for gold loans. So we see people increasingly coming to use gold or their gold ornaments to monetize their gold ornaments and also to take loans on them. So in the Q1 and Q2, we saw a good uptick in the demand for gold loans. Also because economic activities are improving, and both at the rural and the semi-urban areas, we see people increasingly opting for gold loans, because some of the other loans, also unsecured loans, are not that easy to avail now in the last few quarters. So Q1 and Q2 has been quite exciting. The gold price has remained stable. The demand has been very good, and gold loan companies, not only the NBFCs, even the banks have had a good quarter. So also Muthoot Finance. We also had a very good quarter in Q1 and Q2.
Mr. Muthoot, hi, this is Harsh here. Sir, traditionally, the segment has had its cycles, right? Now we've seen a sustained rally in the stock price, and therefore there's a build-up with regard to expectations from you and your company. Talk to us about how do you plan to work around these cycles and ensure that the cyclicality in the industry goes down, because you're so intrinsically linked to gold prices that's where a large part of the risk or the concern comes from. Give us your sense.
I think this question about the cyclical price of gold, cycle business of gold loan business has always been the question, right since our listing in 2011. So we have seen so many cycles of problems, international problems, national problems, right from 2011 to maybe all the gold price falling in 2013, the gold loan regulations coming in 2014. And also, we have seen the demonetization, we have seen the GST, we have seen many, industry upheavals in the finance industry. So many years, every time there is something. So gold loan business has been able to weather all these storms. The main thing is because we don't finance gold bars or bullets. We finance only household ornaments. And there is always a sentimental attachment for gold ornaments, so that even if there is a price correction or if there is a price price correction, people don't abandon their gold. That is what we have been able to prove in the last 15 years after our listing. So this is also something like that only. So gold prices remain elevated. People still pledge gold for their money, but they don't abandon it just because there is some price corrections or price change. But over the last 10-15 years, we've always seen the gold price has only steadily gone up. Of course, there may be some fluctuations in between, but always it has been going up only. So now, usually it goes up slowly, but in the last 1 year, it is going up too fast. So we have also our correction methods for this, because today, even though the gold price, if you take the gold price is 100, our loan to value is only less than 58%. So people have not borrowed the whole money which they are eligible to borrow. They borrow only what they want. So because of this, we don't see a risk about in the price corrections or price of gold in the gold finance industry, especially for Muthoot Finance.
Okay, and Mr. Muthoot, talk to us about what your cost of funds are shaping up to be like. Earlier, you did say that you're expecting the cost of funds metric to start inching lower. Is that something that you're seeing playing out?
Yeah, cost of funds, yeah, it is now stabilized, but the MCLR of banks, they have not really come down, or they have not really brought it down for borrowers like corporate borrowers like us. Probably banks have reduced their lending rates for housing loans and other loans to individuals, etc. But the MCLR has been going down very, very slowly. But of course, it is stable now. We don't see it going down any further, or we don't see it going up also any further.
Okay, and what does that do, Mr. Muthoot, to loan growth? If gold prices don't rise, does it hamper loan growth for you? Because you've demonstrated so much confidence. You've upped your loan growth guidance from 15% to 30-35% for FY26. I'm trying to understand how much of that growth is due to just the fact that gold prices have gone up.
So, see, gold price, it is affecting two factors. One, because of the gold price is going up, people are now increasingly realizing that the gold ornaments they have is becoming more and more valuable. And they are realizing that it can be easily monetized. And so people who need money, instead of selling their gold, they're actually borrowing on the gold, because they feel that after some time, they'll be able to take back the gold ornaments and repay the loan. That is one of the reasons why the gold loans are going up. But of course, having said that, because the gold price is also high, earlier a person with X amount, maybe 10 grams or 50 grams of gold, if he was able to borrow only 2 lakhs or 1 lakh, today he is able to borrow 2 lakhs. So if he requires 2 lakhs, he can use that as a ornament. So some people borrow maximum of the 75%, but generally people borrow much lesser. That is why I said the average loan to value is only less than 57%, because everybody doesn't borrow just because the gold price has gone up. Because the gold price is high or elevated, people are increasingly preferring to use this ornament to take gold. It is not that just because gold price has gone up, they are going to take more loans, and when the gold price goes down, they won't take loans. So it is just one of the factors which influences the demand or the offtake of gold loans.
Okay, and Mr. Muthoot, while we're talking about the gold loans and the gold prices, like you likely said, people are not borrowing only because gold prices are higher. But just to prod on that point a little bit more, are there any guardrails in place to protect your downside risk if at all gold prices start to become slightly volatile or maybe see a cut?
See, most of these gold loans are for periods of average of 4 months only. Although the loans are good for a year, people keep it only for maybe 1 month, 2 months, and the average is only 3 to 4 months. So in 3 to 4 months, if the price is getting corrected also, the new loans which you give today will be based on today's price. So if the gold price is coming down, so the next loan, the new loans will be at the new price only. So that is one correction. Second, we have a margin of the maximum of 25%. As I said, today it is not 25%, it is more than that. 30-35% is, or more, 40% is what we have today. So the margins are there. And finally, most important is only ornaments, which is actually the property of the lady of the house. So usually people don't abandon their gold just because the price is corrected. This is what I said earlier. We have seen cycles of such changes in the last 15 years, and no gold loan company has suffered because of the gold price corrections.
Okay, Mr. Muthoot, appreciate you taking the time out and chatting with us. Really good speaking with you today.